Hey moneymakers, prepare to unlock the secrets of the stock market. Today, we're simplifying stock investing for beginners. If you've ever felt overwhelmed or unsure about how to begin investing, this video is your game changer. Stay tuned because, by the end, you'll be ready to put your money to work. I'm G, and today we're exploring the often complex topic of investing in stocks. Don't worry, because I'll guide you through every step. Whether you're a beginner or wanting to refine your strategy, this video is your key to financial success. But first, if you haven't done so, hit the subscribe button, and let's begin this journey together. Are you ready to make your money work for you? Let's dive in. Let's begin with the basics. What are stocks? Essentially, owning a stock means owning a portion of a company. It's akin to having a small share of a business. Think of it as a pizza party. Each slice is a stock, and you, as a shareholder, own one of those slices. The more slices you possess, the larger your ownership is in the pizza, or in this context, the company. Let's unravel the mystery of the stock market. Picture it as a bustling market where stocks are traded. Companies issue stocks to gather funds, while investors purchase and sell these based on the company's performance and potential. Prices vary according to supply and demand, offering opportunities for investors to purchase at low prices and sell when high. It's akin to navigating a vibrant marketplace with ever-changing values. Why should you consider investing in stocks? Well, stocks have the potential for growth over time, allowing your money to multiply. They also offer the chance to earn dividends, a share of the company's profits. Unlike other investments, stocks provide ownership and a say in the company's decisions. It's a powerful way to build wealth and achieve financial goals. And there you have it, moneymakers, the basics of stock investing. From understanding what stocks are to navigating the dynamic stock market. If you found this video helpful, give it a thumbs up and don't forget to subscribe for more Money Thing insights. Common stock mistakes and pitfalls. One common mistake many investors make is chasing hot tips. It's tempting to follow the latest trends or act on a friend's recommendation, but successful investing requires more than speculation. Avoid the herd mentality. Instead, focus on thorough research and make informed decisions based on your financial goals and risk tolerance. Chasing hot tips. One common mistake many investors make is chasing hot tips. It's tempting to follow the latest trends or act on a friend's recommendation, but successful investing requires more than speculation. Avoid the herd mentality. Instead, focus on thorough research and make informed decisions based on your financial goals and risk tolerance. Neglecting diversification. Neglecting diversification is another pitfall. Placing all your investments in one area can expose you to unnecessary risk. Spread your investments across different sectors and industries to build a balanced and resilient portfolio. Diversification acts as a safeguard against market fluctuations. Ignoring the long term. Ignoring the long term is a common mistake that can impact your financial journey. Remember, the stock market is a marathon, not a sprint. Short-term fluctuations are normal, but it's crucial to stay focused on your long-term goals. Don't let day-to-day market noise divert you from your strategic investment plan. Steering clear of these common mistakes is key to becoming a successful investor. Chasing hot tips, neglecting diversification, and ignoring the long term can hinder your financial growth. Now, we're diving into the world of best practices and strategies for successful investing. The first golden rule: research and education. Before making any investment decisions, ensure you understand the market, the companies you're interested in, and the overall economic landscape. Knowledge is your greatest asset in the world of investing. Establish clear financial goals. Another crucial strategy is to establish clear financial goals. Define what you're investing for, whether it's buying a home, funding education, or securing a comfortable retirement. Your goals will guide your investment decisions and help you stay focused, even during market fluctuations. Diversification and risk management. Diversification and risk management are cornerstones of successful investing. Spread your investments across different assets, industries, and geographic regions to reduce risk. Regularly assess and adjust your portfolio to maintain a healthy balance, ensuring you're not overly exposed to any single investment. Long-term perspective. Embrace the long-term perspective. The stock market is dynamic and short-term fluctuations are inevitable. Instead of reacting to every market move, focus on your long-term goals. Patience is a virtue in investing, and maintaining a steady course can lead to more significant gains over time. So there you have it, moneymakers, key best practices and strategies for successful investing. Remember to educate yourself, establish clear financial goals, diversify wisely, and adopt a long-term perspective. And there you have it, moneymakers, a wealth of insights on navigating the stock market. From common mistakes to best practices, you're now equipped with the knowledge to make savvy financial moves. Whether you're a seasoned investor or just starting, remember to avoid chasing hot tips, embrace diversification, and maintain a long-term perspective. If you found these insights valuable, give this video a thumbs up and don't forget to subscribe for more Money Thing wisdom. I'm Real G, empowering you to build a financially secure future. Stay wise, stay informed, and happy investing.